Hi, good morning, good afternoon, everyone. This is Ankur Rawat. I am the Director for Products and Solutions with Newgen, and I'll be taking you through today's webinar on selecting the right commercial lending solution. We have scheduled this webinar for 30 minutes, and the last 5 minutes we'll keep for question and answers. You do have the panel controls, which you can use to ask these questions, and I'll be happy to answer those towards the end of the webinar. So without much ado, let's get this session started. Now, why did we want to keep this webinar and why is it important for institutions to understand these factors while considering the commercial lending solution? We would all agree that it's not a question of whether the banks should have the commercial lending solution or when they should have. I think we are beyond that time when all of the processes for commercial lending were manual. A lot of the banks already have automated partially or completely. But it's not a question of whether or when now. It is the question of what specifically you need for commercial lending and how exactly would you achieve in terms of selecting that product. Now, why is today's session important? As per our experience and in talking to hundreds of banks and credit unions, we've understood that most of these institutions are changing, updating, replacing their commercial lending software or some of the peripheral modules like spreading or pricing every 3 years. Now, the question I wanted to ask was, why is that the case? If the technology has changed, are the solutions not adopting the new technology? If the bank requirements or credit union requirements have changed, are these solutions not really catching up to the speed of the bank and the credit unions? So that's a pertinent question. The second point which makes today's session important is that this is the commercial lending solution evaluation and selection is not a small project. We have seen banks and financial institutions taking 1 year or 2 years in terms of the thought to selection process. So from the get-go, when the project sponsor or the executives thought about automating or getting a solution for commercial lending, to the point when somebody started exploring the market for the vendors, started getting the information from these vendors, shortlisting all these vendors, budgeting for the project, taking out the RFPs, getting the responses, evaluation, selection, and finally contracting. Now, this is a long drawn process which takes a long time. Now, if this is the kind of efforts which go in commercial lending, let's make it worthwhile in terms of following the right steps for selecting the right product. Now, especially with some of the institutions where the commercial lending is focused, and we've seen that most of the institutions have a tilt towards the commercial lending in terms of the portfolio that they have, okay, not as much as consumer lending. So for all of such banks and credit unions, having the right product for commercial lending origination could really mean and result in a high return on investment. Okay, now having said that, this is a turning point for bank and credit union. So we need to be sure of what we are selecting and asking the right questions while evaluating the commercial lending solutions. Now, how do you find the right solution? It's really about asking the right questions and understanding how the solutions respond to those questions. Okay, so these questions, the following questions in my next few slides, are aimed at arriving at the right decision based on our experience and based on the feedback from various institutions that work with Newgen and others as well. The very first question we need to ask is that, does it automate your end-to-end process or not? Okay. Now, if we look at a scenario 5 years or 10 years ago, a lot of banks were really having a lot of manual process, and then the technology came in, and some of the stages or portions or parts were automated, primarily spreading, okay, risk rating, those kind of activities were automated. But nowadays we are seeing that a lot of automation has gone into the commercial lending, but still the end-to-end automation is missing in most of these institutions. Okay, so we're talking about the automation of entire process, right from the prospecting to the application data entry, collection of the documents, underwriting, risk rating, generation of credit memos, automating decision and approvals, automating the documentation, booking disbursements, and even review and renewals. Okay, so the entire life cycle needs to be automated as much as possible, ironing out or removing any manual handoffs or to and fro between the uh, participants within the lending cycle. The third question is that, does it unify all of your business requirements in one platform? What we're really saying here is that based on our experience, today also there are institutions who have 17 to 20 different systems that become part of the commercial lending life cycle. So right from the core banking to the underwriting systems, to the risk rating systems, to the third party credit bureaus, to the links for title search and Secretary of State's websites. So there are so many systems which come into play when we're talking about the commercial lending solution. Now, we are not saying that one system will replace all of these, but can one solution provide you an integrated platform so that you are able to seamlessly have a data from all of these systems into a single window? So is the commercial lending platform providing you a single interface to automate your entire process, or do you have to manually go to other screens to automate the same process? Okay. So the focus here is on rekeying of the data. So with our experience, a lot of the institutions we have worked with prior to implementing the solution, they were rekeying the data at least 5 to 10 times. Same data was rekeyed into multiple systems, which not only took a lot of time, but also gave in way for errors and mistakes while rekeying of the data. So you may want to avoid that to ensure that the whole process is unified. So what we are really saying is that it has to be unified view of the lending cycle, connecting with multiple systems in the lending picture, right from the core banking, CRM, credit bureaus, appraisal systems, the UCC search, doc prep systems, and so on. Now, another question which is pertinent in today's scenario with the pandemic being in effect, will the platform support digital first strategy or not? Okay. And when we talk about digital first, based on the current scenario wherein the new normal is social distancing, remote working, and online access by the customers. So is the solution allowing all of the participants within the lending cycle to be able to interact with the bank, the credit union remotely, okay, without having the need to either come to the branch or physically send the documents? So the focus here is on digital transformation. Some of the examples that I can take here is a very fundamental digital layer for customers, wherein the customers, whether these are consumer lending customers, individuals, small business customers, or even commercial customers. So are they able to have the online self-service portal to initiate the application for the request, whether it is for renewal or review, or if it is for a new lending limit. Similarly, not just the customers, but also all of your partners in terms of the brokers who are bringing the deals, if you have any. So are you able to provide them this digital layer of application, of having their own dashboards of what has been submitted, what has been approved, getting the status back into these portals? So does this solution support these kind of digital layers? Some of the other examples in which at least Newgen provides a digital layer is the appraisers, engineers, environmental consultants, all the entities which are involved during the commercial lending life cycle. The idea is that the platform should provide the digital layer for all such entities so that you don't really have to do a manual follow-up or communicate through emails, which are difficult to track and easy to miss. Especially with the construction loans, we have seen that there are inspectors who would handle the disbursement process by highlighting if the milestones for constructions have been achieved or not. So for such inspectors, is the platform providing the digital layer or digital apps wherein the inspectors can go online and check on the status of the construction and then help the lending team to validate the same and disperse the funds. Okay, so these are some of the digital layers. Along with these, we also see that a lot of institutions who sell participation loans, for them it is critical to have a participation portal wherein the participating banks can log in, see the applicable or available loans for participation, provide a quote for those, and then based on the evaluation, if they are selected, continue the rest of process using the portal. So again, only relevant for institutions who have a good chunk of their portfolio as participation loans which are sold. Another key question is that does the platform allow automation and configurability of credit policies or not? Now we have seen that in this situation nowadays, the credit design is really involved and sophisticated. However, with unique situations, we also see that a lot of times the credit analysts are taking each loan as one case and handling that separately. So what you may want to do is you may want to automate all of the regular or repeated scenarios as part of your credit automation, whether it is underwriting or credit policy, exception management, covenant monitoring, all of those. And secondly, going forward, this platform should also allow for configurability of these credit policies. Okay, so not only this should automate for today, but it should actually allow automation for future use cases for the bank and credit unions. Okay, now all of this should be with business users. Obviously, IT users may able to change these on behalf of business users, but we have seen that if you are empowering business users for the things that they are interested in, like the business rules, reports, all of those, it really involves them in the decision making process and empowers them for the change management. Another critical question is that does it enable a 360-degree view for proactive management? Okay. Now we all would agree that the process control is impossible or unimaginable without process visibility. So in order to have some kind of control, you need to have the process visibility. So is the platform providing a 360-degree view of the commercial lending? can the solution understands the unique monitoring requirements of each individual? For example, we have seen that the agenda for the executive management would be completely different from monitoring as compared to the agenda for the credit head or as compared to the agenda of credit admin department. So do they have their own personalized dashboards providing the status of the process in real time and providing the monitoring alerts? So can they define the scenarios where they need to pitch in and take corrective actions? A very good example is portfolio monitoring reports. So the portfolio managers should have the alerts that can be defined based on the scenarios. So anytime, as an example, anytime the days past due for a particular loan go beyond a certain threshold, or if there is a Reg B non-compliance, or if the deposit accounts have, the percentage of reduction in deposit accounts is more than a particular amount. So with all of such alerts that the users are defining in the solution, it really gives a proactive management perspective to the commercial lending cycle. Now, along with that, while we all focus on the functional reports, we all focus on the overall, the dollar amount that has been dispersed, interest income that has been received. We tend to a lot of times undermine the critical aspect of productivity. Okay, so the platform should also enable you to understand the productivity efficiency throughout the system. You should be able to dissect the entire process and see where you have bottlenecks, what is the uh, critical path for the process, and which are the teams who are performing better than the others. So all of those productivity dashboards and reports should also be one of the critical consideration or parameter. Finally, one of the last, but not the least, this is actually one of the critical components of evaluation. Does it let you build your own functional differentiators? Now we all have seen that the package solution, the benefit of package solution is quick go to market and all of the cost advantages. But how do you differentiate your institution with an institution across the street? Okay, do you have the flexibility at your end to build in the functional differentiators or to add in the secret sauce from your institution? Okay, now this could be with respect to the products that are being offered. This could be with respect to the cross-selling or the underwriting parameters that you have, or it could be with respect to the additional features of the products that you offer. Whatever that functional differentiator is the platform allowing you to configure this rather than customize it, and which really boils down to the low code or the coding exercise. So it should allow a low code or even a no code change management for incorporating these functional differentiators. Okay? Now with a platform which allows you to do this, what it really means is tomorrow if you are changing the strategy for the lending, it will be a quick time to market for you. It will be a quick change management process rather than months and years of project management. Okay. Now, while we have discussed some of the critical parameters that are important for selecting the solution, I would always add that it's not just the right solution, it's also about finding the right partner. And these are some of the things that you should consider when evaluating a vendor or a partner. We would always want to call it a partner because partnership is all about a win-win situation. Okay. So some of the things that you should, these are boilerplate, but I'll probably go into some of the aspects which are more important as compared to others. So obviously the domain and the experience of the partner in the business is important. So how long they have been in the industry, what is the overall focus for them? Is it the banking? Is it within the banking? Is it the commercial lending, consumer lending, and so on? Is there a flexibility in the partnership? And what I really mean by this is that how well the partner or the vendor is aligned to the strategic objectives of the bank and credit unions. A quick example is, a question that you can ask is, if tomorrow in mid of the project, if we change our headquarters, or tomorrow mid of the project, if we have our priorities changed in terms of the product deployment or the implementation, how is that dealt by the partner in the spirit of partnership? Okay, so these are pertinent questions, not theoretical but really practical. In terms of references, uh, what are the things that the references or the customers like about these partners? How flexible they were? Or what kind of support was provided by all of these partners? Okay, and then a long-term engagement versus one and done kind of partners. So is the partner offering only one of the solutions, or do you have a scope for a long-term engagement and a fruitful partnership over the period of years? Okay. So having said that, I just have a couple of slides on Newgen, and we wanted to also take this time to just highlight our experience and some of the benefits with Newgen's commercial lending. So as an organization, we are a 28 years old organization, okay, and with 560 plus customers, with a penetration across 70 different countries. So what it really means is that the best practices from around the world, which may not be maybe unheard in United States itself, and which could add value to the overall solutioning, we always bring that those functionalities to the table. Okay. And we have been featured in Gartner's and Forrester's Magic Quadrant for the underlying platform, which is a BPM platform that we have. It's a low-code platform which allows us to implement the solution and ensure that it is not obsolete, and the customers who are using it are not really evaluating the solution again in next 3 years. So this is for the lifetime in terms of adopting to the changes in technology, changes in regulatory environment, as well as changes in the business requirements. A 3,000 plus employee strength, we ensure that the lead times for implementations are shorter. So as long the as soon as the clients want us to implement, we are able to implement in time and seamlessly as per the requirements. Okay. And a lot of spend is done on the research and development. So we have 44 patent filings, and some of those patents have already been filed and approved as well. Okay. So that was the end of the webinar, and I hope I've been able to add value to your time. I would now open the session up for any questions that you might have for me. Okay. So I do see a question here. Let me just open the question. Okay. So the question is that, is this platform also providing the SBA and small business loans? So yes, it's the same platform that Newgen has, and we do offer SBA and small business loans, again, part of the same platform with consistent user interface, consistent integrations, and all of those. And these are typical in nature, or these are modular in nature. So we do have pick and choose or a la carte kind of approach for our customers. Okay. We do have comment from Robert. So nice presentation. Thanks, Robert. Okay. Yes. So this recording will be available shortly with the on Newgen website itself. So you can always refer to the recording. And Robert, if you need a copy of these slides, we can surely connect with you and arrange for you to receive these. Thank you. Any other questions from the team? Okay, I have another question. So how long does the implementation time takes? So this is a I would say a very casual question, but the answer is really dependent on the type of project which the institutions choose and pick. Okay, so we have seen that a lot of institutions or banks, credit unions want to have quick wins, so they have started small, let's say with the small business lending and going to the commercial lending, CRE, and so on. At the same time, we do have clients who had some of the resources allocated and they wanted to implement everything in one go. So depending on the scope of the project, depending on the products which are selected for this implementation, we have seen the cycle time for commercial lending anywhere between 6 to 9 months. And again, this would differ. So we can always have a chat with some of you and understand your requirements and accordingly share the timelines. Okay. So I assume there are no more questions. What I'll do is I'll close the session for today, and shortly, if you come back to the website, you should be able to retrieve the recording and see the recording for today's session. So thanks everyone for joining in, and stay safe.